We are kicking things off with the latest from the auto world. Tesla Inc. has delivered an earnings beat for the first quarter, with profit beating Wall Street estimates and revenue growing year over year. The EV maker reported adjusted earnings per share of 41 cents, above the 37 cents expected by analysts, and revenue came in at $22.39 billion, up 16% year over year. We dive into the details of this massive financial report right now.
Here's a simple way to protect your phone without stress. This ALEN 3-pack comes with tempered glass screen protectors, camera lens protectors, and an installation frame for an easier, cleaner fit. It's clear, case-friendly, and built to help guard against scratches and everyday bumps. Check the link in the comments to get it on Amazon.
Next up, we look at the consumer perspective. Investor Ross Gerber of the investment firm Gerber Kawasaki has urged drivers to opt for EVs in view of the Iran war that has led to surging gas prices across the U.S. Gerber outlined the benefits of EVs over gasoline-powered vehicles, stating that gas prices do not matter to the 10 million people that own a Tesla, and he encourages everyone to go get one. Our third story focuses on the complex regulatory hurdles facing autonomous driving technology. Tesla wants its electric cars to drive themselves all over Europe, but Elon Musk's company is struggling to get its full self-driving software cleared for use on public roads across the continent. We examine why countries like Sweden and Finland are hesitant, focusing on safety concerns regarding icy roads and the confusing naming of the FSD system. Finally, we wrap up with the status of that European rollout. Despite the initial success in the Netherlands, the road to self-driving EVs in Europe is full of red tape and skepticism from regulators. We break down the high bar Tesla must clear to get a green light for the whole union, and what this means for owners in the coming months. Stay with us for more breaking news. Tesla Inc. announced its first quarter financial results, reporting an earnings beat but a revenue miss, according to data from Yahoo Finance UK. The electric vehicle maker delivered adjusted earnings per share of 41 cents, surpassing analyst expectations of 37 cents. Revenue reached $22.39 billion, marking a 16% year-over-year increase. Although this figure was a modest beat against estimates ranging between $22.35 billion and $22.64 billion. Automotive revenue climbed 16% to $16.234 billion. In contrast, services and other revenue saw a significant surge of 42%, growing to $3.745 billion. However, revenue from energy generation and storage declined by 12% to $2.408 billion. Profitability showed marked improvement. Total gross profit reached $4.72 billion, pushing the gross margin to 21.1%, an increase from 16.3% the previous year. GAAP operating income stood at $0.9 billion, and GAAP net income was $0.5 billion, with non-GAAP net income reported at $1.5 billion. The company detailed a $2 billion investment made in CEO Elon Musk's space firm, SpaceX. At the quarter's end, cash equivalents, and short-term investments totaled $44.7 billion, an increase of $0.7 billion sequentially, primarily driven by $1.4 billion in free cash flow and $1.2 billion in financing inflows, partially counterbalanced by the SpaceX equity investment. Tesla emphasized its ongoing strategic investments across artificial intelligence infrastructure, battery production, and manufacturing capacity. The company confirmed the ramp-up of AI compute capabilities and preparations for upcoming products, including the Megapack 3, Cybercab, and Tesla Semi. Geographically, Tesla noted strengthening demand across multiple regions, citing continued growth in Asia-Pacific and South America, alongside a rebound in Europe, the Middle East, Africa, and North America. Furthermore, the company highlighted efforts to localize and vertically integrate supply chains to secure key materials amidst geopolitical uncertainties. Looking toward the future, Tesla cited several key drivers for its 2026 outlook, including the continued development of full self-driving (FSD) technology, the expansion of its robotaxi platform, progress on the Optimus robotics program, and growth in energy production capacity. Following the release, Tesla shares rose 3.5% in after-hours trading. Tesla Europe's FSD visualization truck. Tesla investor Ross Gerber has issued a strong endorsement for electric vehicles, asserting that gasoline prices are irrelevant to millions of Tesla owners amid rising fuel costs driven by the Iran war. In a post on X, Gerber stated, "Gas prices don't matter to the 10 million people that own a Tesla," encouraging consumers to purchase EVs, noting that gas prices are not expected to drop soon. The context for this sentiment comes as the national average gas price in the U.S. reached $4.483 per gallon on Tuesday, with California experiencing significantly higher costs, peaking around $6.114 per gallon. Data from the American Automobile Association, AAA, highlighted extreme spikes, with gas prices exceeding $7 per gallon in Mono County, California. In contrast to fluctuating fuel costs, the used EV market shows resilience. Tesla vehicles have maintained their values and depreciated less on the used market, becoming among the fastest-selling cars in the used EV segment, with an average dealer lot time of only 25 to 34 days across its lineup. Furthermore, demand for used EVs is surging, with over 44% of used EVs sold below $25,000. The escalating geopolitical tensions, specifically the war in Iran, are a key driver of the rising fuel costs. This situation has drawn political commentary, with Governor Gavin Newsom criticizing President Trump for contributing to higher gas prices for Californians. Meanwhile, President Trump announced a pause on the Project Freedom initiative guiding commercial ships through the Strait of Hormuz, though he affirmed the continuation of the U.S.-led blockade of the area. On the broader automotive front, Tesla recorded sales upticks in certain international markets, including France, the Netherlands, and Sweden. Separately, the electric vehicle sector continues to see significant corporate activity, with e-commerce giant Amazon becoming a major customer for Rivian Automotive, accounting for over 50% of the automaker's revenue from fleet sales during its first quarter 2026 earnings call, as Rivian reported beating market expectations on revenue. Tesla's ambitious goal of deploying its self-driving technology across Europe is encountering significant resistance, as regulatory hurdles prove much more complex than anticipated. While the Netherlands granted approval for Tesla's full self-driving FSD software, sparking optimism across the continent, progress has stalled elsewhere. Regulators in several key nations remain highly skeptical of the technology's readiness for public roads. Concerns are multifaceted. In Sweden, the Swedish Transport Agency is focused on instances where Tesla's software has reportedly allowed vehicles to exceed legal speed limits, emphasizing the need for absolute adherence to traffic laws. Finland is preoccupied with extreme weather conditions, with officials questioning the system's capability to handle hazardous situations like driving at high speeds on icy roads during winter. The ability of the software to react quickly to slippery conditions remains a major point of contention. Furthermore, the terminology used by Tesla is creating friction. The proposed European version, termed FSD supervised, requires a human driver to remain attentive, leading regulators to question the accuracy of the full self-driving branding. Officials fear that the name could lead to driver complacency, potentially encouraging misuse such as texting or web browsing, while the vehicle is in autonomous mode, despite Tesla's assurances that constant vigilance is required. Efforts by Tesla to accelerate approval through direct engagement with fans have reportedly backfired, leading to frustration among officials who felt overwhelmed by unsolicited communications. Moreover, the lack of transparency is slowing the process. The Dutch regulators have withheld crucial data used for their approval, creating a barrier for other nations seeking to verify safety metrics. Achieving a comprehensive approval across the European Union demands a high threshold. Securing a yes vote from 55% of member states, representing at least 65% of the total EU population. With major voting rounds scheduled for July and October, Tesla owners in Europe are likely to remain reliant on manual control for several more months. Despite possessing the underlying technology, Tesla must successfully address concerns regarding speed compliance and system clarity before gaining widespread acceptance in the region.